Coming to you weekly from the OnPay recording studio, this is the Cloud Accounting Podcast.
Hello and welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
And I'm David Leary.
And we are joined today by Heidi Henderson, Executive Vice President at Engineered Tax Services and host of the Healthy, Wealthy, and Wise podcast. Heidi, welcome.
Hi, Blake. Hi, David. Thanks so much. I'm excited to be here with you guys.
It's great to see you. We got to see you in person not too long ago. I think it was it QuickBooks Connect, David?
Yes, QuickBooks Connect, because Heidi is in Vegas, so she just happened to be in town.
I happened to be in town while you guys happened to be in town if you remember, during the NFR. So we were ready to go to the rodeo, and I was so disappointed Blake wasn't in his cowboy hat.
And that was funny, right? It was a total coincidence because you weren't there for QuickBooks Connect. You were there for the rodeo.
Yeah.
And this is so cool. You have horses on a ranch. What kind of horses do you raise?
Oh, geez. It's a bit of an addiction. My husband is a hunter, so we have a number of quarter horses, but then I show dressage horses. So we've got some warm bloods that are kind of European bred, big fancy horses. He calls them the fancy folks. And then we've got our mountain regular folks.
You've got the whole continuum, the working horses and the fancy horses. That's great.
Do you ride the fancy horses, or are they just pure show?
Oh, no, I ride and show them constantly.
Well, yeah, so you were there for the rodeo and wearing your, appropriate attire for that. We were there for QuickBooks Connect and we got to meet up and that was really fun. And we got to chat, and I'm looking forward to chatting with you today about taxes because your firm is called Engineered Tax Services. And when I first heard the name of your firm, I thought that's so interesting. Engineering and taxes together. Can you give us the explanation for that? Like, what do these two things have to do with each other?
Yeah. We have this little tagline, and I kind of joke around that it's silly, but it really is comparable. It's that we marry the science of engineering with the principles of tax and accounting. And people will call our firm and say, hey, I need a new accountant and I need someone with a lot of strategy. And the first thing I say is, we are not an accounting firm. We don't want to do your tax work. And then they say, or if someone introduces us, they'll say, well, no, I already have a CPA, so I don't need your help. And I says, well, that's really good. We want you to have a CPA because we want to work with you and your CPA and really look at the strategy behind what you're doing and help capture some of these really complex tax credits and deductions that might be available for business owners or real estate investors, and just looking at some of those complex areas and capturing all of that stuff that's out there that a lot of times gets missed.
And a lot of these tax credits are like the green building and they're
R&D.
Engineering tied, right? A lot of these tax credits.
Yeah, exactly. And that's where the engineering principle comes into play. To your point, a lot of it is related to real estate. So cost segregation is really then breaking down all the components of a real estate asset, but also looking at the green energy. So what is energy efficient? How efficient is it? And then there are some federal incentives against income tax to offset the cost for either building a new building that is energy efficient, building energy efficient residential housing units, or retrofitting an existing building that then makes it more efficient. So it's got lower costs to actually operate. It uses less public resources to power that and drive energy. So the IRS then has an incentive to help fund a portion of those things. So yeah, those are a few examples of what we specialize in.
So it's a different skill set than a normal tax preparer. Like you're going to claim the number on the return as the preparer, but how do you get to that number?
Exactly. Exactly. Yeah. Because a lot of those are requiring a physical site visit or some engineering background or energy modeling. I mean, I've never seen a CPA yet who can go out and do energy modeling on a building to determine the energy efficiency. And that's why before we jumped into this work, we've been in business for 23 years, but before that, there was this broad expanse between what developers or even what engineers like us who are looking at energy efficiency, what they could help a client with versus what a CPA could help with. On the engineering side, they were like, what? This is a tax credit? I don't know how to read the tax code. CPAs would look at it and say, what? This requires energy modeling? I don't know anything about that. And so for years, we saw a lot of these incentives just get left by the wayside. CPAs don't talk about it. They don't bring it up with their clients. On the design side, if you have an architect or engineer who's working on these design projects, they're not going to talk about it because they're not reading, 300 pages of tax code to understand it. And so there was this big gap. And that's really where we were able to kind of start with identifying that there were some expanses here with a lot of opportunity for clients to reduce their tax and capture these write-offs, but someone needed to come in and sort of bridge that expanse between the two industries.
And you have a background in commercial real estate. So you've combined these two things, commercial real estate, they've got all the tax credits going on, combine that with your background in accounting. I mean, did you fall into this or was this planned?
It's a great question. You know what? I have found in my career, especially with managing and hiring employees, it's so bizarre, some of the weird specialties that people get into. And that's what happened with me as I went into accounting. I have a master's in tax. And I was pulled in and mentored by someone who owned a commercial real estate group when I was in college, actually. And they really helped cultivate that. And of course, I'm seeing these people running a very successful real estate company. These guys are coming in Porsches every morning. And I am like, geez, what are they doing? And so I really grew up in the space of blending accounting with real estate and understanding how these correlate. What then happened is my sister began working with engineered tax services. And she, about a year later says, Heidi, you've got to come work with me. And in fact, I actually just did a podcast with her on my podcast that'll come out, I think, next week. And we were talking about it because she says, you got to come work with me. And I was like, Kim, that's a horrible idea. Family and business is not always good. And so I was worried about it. But she goes, but this is literally the whole culmination of your career with tax and understanding real estate and how we can blend these opportunities is where this all comes to play. And so it just fell into my lap from that sense, and does absolutely tie into what I'd spent my career really learning and becoming really knowledgeable on. And so it's been fun to be more in the consulting space and really working with business owners and CPA firms to strategize and to find opportunities.
So we're going to talk today about tax myths, and we've got some big news from the IRS about how they want to spend the $80 billion. We also have this ongoing shit show, if you will, with these ERC mills. And given that you are in the tax credit space and have been there your firm has been there for decades, right? Like, what is up with this whole ERC mill thing? Like, give it to us straight.
Blake, oh my gosh, you're jumping right in.
Oh yeah, come on, let's lay down on it.
Yeah. Okay, I have to start with a story. We've been in business for 23 years, okay? We have audit defense on everything we do. We're going to defend that. We're in the long game. We do lots of things that we plan on being in business for a long time. I was at a conference probably a year and a half ago when ERC was really hot. And there was a guy there who was selling ERC with some group that had just been founded. If you pull it up and look at their corporate structure, it was like 4 months old or something. And he was hard sell pitching ERC. And I asked him, I said, so that's all you do? You made a company to do this? Oh yeah, we're making millions. And I said, how's that going to go for you when this goes away? Because it's kind of a short-lived incentive. And he said, oh, I'm just going to get everything I can. And then I'm done. I'm retiring. I'm going to go lay on the beach in the Dominican Republic and I'm out of here. And
hiding from the FBI and the IRS.
Yeah. Yes, right. And so I asked him.
I love the honesty there.
I know. And I was like, okay. And I says, well, where's the technical background? And he goes, well, I mean, we've never been audited. And we tell our clients, we've never been audited and we haven't had anything thrown out. And I was like, this has been around for 3 months. But that was the pitch that he was going and telling their
Which
clients.
arguably is true, right? Yes,
Yeah.
they haven't been audited, even though it's going to take years
God.
before the IRS figures all this out.
Exactly. Right. And going back to your point, Blake, about now the IRS expanding and hiring all these people, it's like, well, they're not really auditing very many of anything right now. And so that was so alarming to me. And it has been crazy. We have clients, we have CPAs. I had a CPA send me an email that came from a client, and he says, hey, look at this. What do you think? And it was one of those mailers with like the 3 perforated edges that you open up, and it's looked like it's printed in the old dot matrix type printer. Looked exactly like something you would get from the IRS. And it literally said, we're a government agency telling you you qualify for up to $586,000 in federal credits, and you just need to call this number. And and he was like, my client got this, and it says that he for sure qualifies. And I was like, oh my gosh, this is
I just got a new voicemail yesterday from Sarah telling me how I can receive up to $26,000 for each employee, and she has her phone number.
I get
one of
those
these days
too.
We should just call on the show.
I just think it's funny that we get listener voicemail, and then it's basically half listener voicemail and half ERC scams.
Yeah.
Right. Or mills or whatever. It's nuts. I wonder. So you brought up the $80 billion. Let's get into talking about that. How is the IRS going to spend the $80 billion? Hopefully on maybe shutting down some of these ERC mills. Although I wonder if they'll be able to do it before they all like get their money and then, go retire in the Dominican Republic, right?
Yeah.
Beyond extradition treaties, I imagine.
Exactly. Well, I was reading some of this in the last couple of days, and one thing that I did find interesting, there's 2 points I wanted to mention on this.
Mm-hmm.
One is they were saying that they're actually not necessarily looking at 78,000 or is it 87,000 new employees, something like 30,000 right now, but that they've lost almost that many employees since 2020 and haven't been able to really recoup the employees. So their employment numbers are down dramatically. So I think first off, that's one point is they really just need to kind of replenish their teams.
Wait, you mean it's not going to be 87,000 armed IRS agents, Heidi?
They're not going to come chase us down.
I mean, they should go after that guy in the Dominican Republic who's, stolen all that money from the government via fraudulent ERC claims, right? Hopefully that's what they're doing. But
right, because he's going to be on the beach, and then his clients that he claimed these fraudulently for are going to have disallowances plus penalties and interest, and he's got his share out there. Nobody's going to find him.
Yeah, and the problem is,
do we know that these people, this decrease in employees since 2019, is this the retirement cliff that's happening at the IRS, or is this just like people are like, I'm out?
I think
everybody else is having that problem.
I think, with the IRS, I think it was a lot of retirements. That's what I heard. Like they had an aging workforce. They hadn't been hiring for a decade or more because they were under freezes.
If I go back to during COVID, like they had a lot of highly people in that highly risk category for COVID. That's why they had a problem bringing people back in the office. Yeah. So yeah, you're right. They're probably close to retirement.
So here's the breakdown. The IRS was mandated to say how they're going to spend the $80 billion that they have been given by Congress over the next 10 years. Mm-hmm. And the plan is, at a high level, enforcement is $45.64 billion. So over half of that is going to be enforcement. Operations support gets $25 billion. Business systems modernization only gets $4.75 billion. Which kind of worries me because we're a show that, sits at the intersection of accounting and technology. And that's a tiny little sliver of that money. I mean, maybe they can do it for that, but it just seems like from a priority standpoint, I don't know. And then taxpayer services only gets $3.18 billion. So I think that's where people are saying, they really are going to just hire a bunch of agents to go and audit people. And I guess the question is, who do they audit, right? Is it going to be, as promised, the folks making over $400,000 a year, or is it going to be everybody?
Yeah, I mean, I agree. I keep seeing that number, people over $400,000, which I think is certainly where there's more meat on the bone. And certainly they're going to look at the potential to gain additional tax revenue. So they're going to want to go after those people that have higher incomes. And I really do think they will absolutely target people that are using certain strategies to deploy more write-offs. So whatever that may be, to find ways to mitigate tax through strategies or investments or depreciation or whatever it may be. I think they're really going to dive deep into a lot of those strategies.
Yep. Go ahead, David.
I saw an op-ed in the Wall Street Journal about the problem with this $400,000 threshold is a lot of people are going to game it, right? So they're going to figure out, like, how do I show up at, $399,000 so I can reduce my chance of being audited? And that's probably the sweet spot. Now, they're not saying, like, maybe when they do audit people under 400,000, it's only going to be the 390,000 people, because that's probably highly likely that gray area where people are, if they're unscrupulous, they're trying to get underneath.
I can't remember who made this promise. Was it Janet Yellen who said it? I don't remember. Somebody high up in the administration said, you're not going to get audited if you make less. You're not going to have a higher chance of getting audited if you make less than 400.
Yeah, so what she said is, of any new resources they get, they're not going to put them on the 400,000 and under threshold people. So whatever's there now will remain.
Right. But then the question is, does that mean the people who reported already under 400,000 but probably should have reported more? Right? That's where the question is. So
yeah, that's a good point, because you've got your gross and you've got your net.
Right. Which number is she referring to? Is it adjusted?
Right. Right.
Yeah.
Yep. I think we've seen some, certain politicians that, remain unnamed, I think might have had a lot of gross, but net was in the negatives.
Jessica in the live stream says the problem with the new IRS funding is that most new hires will be incapable of high-level, complicated audits. So they'll start by getting experience on simple returns, right? And I think that is a good concern, right? Legitimate concern. You can't just take a new hire and toss them into an audit of some sort of inter-nested 200 LLC, complicated situation. They just can't handle it, right? Mm-hmm. So where are they going to?
So many people that take the child tax credit, or the early child tax credit, get audited.
Earned income.
It's easy.
Yeah, tax credit, right? Yeah. Those are easy to audit, right?
Mm-hmm.
So instead of 400,000 being the threshold, it should be like 48,000. Anybody, stop auditing people under 48,000. It's a waste of everybody's time and resources and energy. Stop.
So
well,
go ahead, Heidi.
And to Jessica's point, I mean, we've seen that firsthand. We specialize in R&D credits as well, and R&D credits are some where maybe we'll deal with an audit, but the R&D credit's highly technical. So our project managers are all tax attorneys. This actually goes back to my background is weird because this is blend of real estate and accounting. Some of my project managers, I have a project manager that has a degree in software engineering and then went back for a law degree. So they're a tax accountant, but started off with software, and you're like, how did that happen? But they're this incredible R&D person because they can communicate with our software developers at the same level and speak their language, but they understand the tax. So it's a weird blend. But how rare is that? So then when we deal with an auditor who comes in to review an R&D credit, we've actually asked in an audit, we asked a new auditor who was looking at a project, we said, have you ever done an audit on an R&D study before? And the response was, no, this is my first, but I'm sure I'll figure it out. And so just from that standpoint, you have to realize that a lot of these auditors are not highly educated individuals. These are not CPAs. These are not people that have the technical knowledge that we have from a lot of our CPA firms and a lot of these groups that are doing technical analysis.
Yep. And that's why it's important to have the backup and to have the report, right? Because if you drop that nice thick report on that auditor's desk, what are they going to do? Are they going to go after you, or are they going to go after the person who has no documentation, right?
Yep.
Don't be the low-hanging fruit.
Mm-hmm.
I mean,
that's exactly right.
But going back to that graph, Blake, right? And most of the money's being spent on enforcement. And I think that's a bad way to present that, right? Because that could actually mean they're going to pay people higher wages. That means there's going to be higher quality individuals, but that gets all lost with the word enforcement.
Right. It just people just think you're hiring a bunch of auditors.
That
right?
should just just said HR, right, or human capital or something like that. It would garner a much different reaction. But presenting it as the biggest slice of the pie as enforcement scares people. Very political. And shame on accounting. Is that Accounting Today who made that graph?
I mean, it's their article. I assume they made the
Shame
graph,
on
but
them
that's
presenting it that way, because then everybody, all the other news medias will just run with that narrative.
Yeah. Well, and to your point, David, I appreciate what you're saying, because if you read further down, it says 5,000 of the hires are going to be specifically for customer service. And that's a big part. When I read the initial code that came out for this massive lump sum of money going to the IRS, one thing that I thought was fascinating, you guys understand technology. I was blown away by this, but there is a tremendous amount of money. I think it was something like, don't quote me, but I don't know, $5 to $10 billion to implement a callback system. And my first thought was, are there not great independent software companies out there that have callback systems that don't cost $5 to $10 billion to implement?
I mean, you could just go out and buy one of them at
Right?
that price point, right? Just go buy a
The whole
developer.
company, the whole
Buy
company.
the whole company. Yeah.
Exactly. Right. Exactly. And that's what I find so intriguing, because I'm sure many of the accountants on this line know that the IRS has a 3-hour courtesy disconnect. So if you've been on hold for 3 hours, they feel bad for you. So out of courtesy, they'll just automatically disconnect.
So thoughtful of them.
Yeah, exactly. And you're like, what era do we live in? So to your point, David, I think they could certainly communicate what they're doing differently, because if they really spin this, that look, we're trying to implement a callback system, we're adding tons of people to help on the customer service side to really make the IRS more user-friendly and more responsive to help taxpayers and to help the accounting industry get the responses we need, get the answers we need to some of these technical questions or issues that we run into. Because that's one of the biggest problems. How many errors are related to the fact that it's almost impossible to get a hold of an agent?
With all the banking crisis stuff going on, you're hearing a lot of podcasts, lots of stories about FDIC. Have you heard about these stories? Like, apparently it's the greatest government agency ever. They're polite. They come in. They know what they're doing. They're confident. It's very organized, and it's it kind of like it's like the Chick-fil-A drive-through of a government agency, right? It's like, how do they get that culture from that organization into the IRS? Maybe more.
That's a good question.
Mm-hmm.
Well, let's think on that. Maybe we'll come back with a plan next episode. In the meantime, let's have some fun and talk about the terrible tax advice on TikTok. Always love highlighting that. KeeperTax.com, not the same as the Keeper practice management software. KeeperTax.com did a great roundup of the worst tax advice or misadvice on TikTok.
Now, did you make sure none of our friends are on this list before you got it to the show?
Well, it's funny. They highlight two of our friends, creators Duke Loves Taxes and the Not Spicy Accountant, both who we know. Laurel and Wilson is the Not Spicy Accountant, and Duke, I forget his last name.
Alexander.
Duke Loves Taxes. We got to meet him at QuickBooks Connect. They are doing a great job of dispelling the misinformation. But I saw somewhere that 1 in 7 financial posts on TikTok videos is like wrong. So there's a lot of it out there, and there's only a handful of people that are talking about it. So let's go through these.
Okay.
Khalid, who is in the live stream, said, "Can I Section 179 my G-Wagon?" LOL. Well, let's find out, shall we? So myth number 1, these are the top 5 myths on TikTok. If you write off $500 in business expenses, you'll save $500 on your taxes. I think this I also affectionately call the Schitt's Creek theory of taxation. Right?
Mm-hmm.
Have you seen that meme, David, where it's the dad? I forget their names actually. It's dad and son are talking, and son says, it's a write-off, and dad says, "Do you even know what a write-off is?" Right? It's a write-off. Who pays for the write-off? So yes, if you decrease your tax bill, as we all know, it's not a 1-to-1 reduction in your taxes, unless it's one of those awesome tax credits, right? Like that, Heidi?
Mm-hmm.
There are a few of them.
That's exactly right.
What's your favorite 1-to-1 tax credit?
Oh, probably 45L credits.
45L.
And
What's
they just increased some energy efficient housing units. So they just increased it up to $5,000 per unit. So like someone builds an apartment complex with 100 units, they can get a $500,000 tax credit towards the cost of that project. So that's the one I'm talking with a lot of people about these days.
Ooh, that's a good one.
Mm-hmm.
Myth number 2, people who rely on their appearance for work can write off appearance-related expenses. Yeah.
I did not get that memo.
So, yeah, you can't do
But
it.
that
and
one's being stretched because I think like there's some gray areas like newscasters and things like that. But now people are applying to like, well, I'm a real estate agent. Like people are really trying to stretch that one. You see that one a lot.
And I have seen these myself. Like people are saying you can write off, your gym, membership and all that stuff.
Or if you put your initials on your shirts or inside your coat jacket, then you can count it. Like there's all this crazy stuff.
Oh, uniforms.
Rule of thumb, if it's suitable for everyday use, it is not a write-off. There was one rare court case where the taxpayer came out on top. In the 1994 case, Hess versus Commissioner, the petitioner was an exotic dancer who got very large breast implants for professional branding purposes. But, not practical for daily use, I guess, is the... I mean, you gotta love this stuff, right? Gotta love it.
This is the best article.
I know, right? Yeah, here's another one. Drake versus Commissioner. The court ruled that a man enlisted in the military could not write off his mandatory biweekly haircuts as they doubled as a personal expense. Hines versus Commissioner. The court ruled that a news anchor could not write off his makeup, haircuts, or wardrobe, even though they were required for him to maintain a neat appearance at work. Pevsner versus Commissioner. The court ruled that a manager at a, how do you say that? I'm not fancy enough to know how to say the Yves Saint Laurent.
Yeah.
Boutique could not write off the YSL clothes she was required to purchase and wear at work. And Hamper versus Commissioner, that one's recent, 2011. The court ruled that another news anchor could not write off expenses like manicures, hair care, makeup, and conservative on-air clothing, even though all those were required for work. So, David, you're wrong.
I was wrong. Let's see.
You were repeating
I will pull down my
misinformation.
TikTok videos that I put up with this. No.
Myth 3. Lifestyle influencers can write off lifestyle expenses like clothing hauls or home decor. That's a big one for Instagram, right? Because people are always like buying stuff and then unboxing it at home for their videos. If you use it personally, you can't deduct it.
So just to clarify on this, if I buy an Ember mug, it's like $100, and I only use it when recording the podcast, and I don't drink out of it any other time, I might be okay.
I don't think so, David. And actually, I have an Ember mug right here. Thank you to Avalera for providing me with this Ember mug here. They're quite handy. Yeah, you can't do that. Let's see. Do they have any good cases in here? I don't see any. Okay, myth number 4: you need an LLC to claim write-offs. That's a good one, right? Put everything in an LLC, and it's a write-off. Just buy your house in an LLC. Now it's a business expense, right? And then, of course, all the tax pros are saying, like, you don't even need an LLC, right? And also, in many states, it's so expensive to just have an LLC if you're a freelancer. I think that was the worst thing when I started out in California. The $800 a year just for the privilege of having an LLC didn't make it even worth it for me. It's ridiculous. Myth number 5, fifth and final myth. Think you might want a Hummer to use for work? Go for it. You can deduct its first cost the first year it's in use. That's a myth. Creators who encourage this deduction are referring to Section 179, a portion of the tax code that lets you deduct the purchase price of a business vehicle if it meets certain requirements. These requirements are: it weighs between 6,000 and 14,000 pounds, and you must use it 50% or more for work. There is a bit of truth in this myth. You can deduct vehicles that meet these requirements under Section 179. However, several creators failed to mention one major restriction on using this tax code provision for savings. You can only deduct the business use percentage of any purchases. That means if you use your G-Wagon for work 55% of the time, you can deduct 55% of its purchase price.
So what about if you skin the car and you skin everything? That doesn't matter.
I mean, I don't know, David. I'm not a tax professional. I'm just reading a blog post.
Because I'll see this a lot of times down in Rocky Point. You go down to Rocky Point, people are down there, they got their kick-ass trucks and they got their side-by-sides, and they're all skinned for their roofing company or whatever it is. And I'm like, is this an advertising game or are they playing a tax game? I'm always like confused by one of the two.
How much is a G-Wagon? So like I'm seeing... It's MSRP is $156,000, right? So it's not exactly the best strategy I mean, yeah, you can reduce your taxes, but you're going to be spending a lot of money to do it, right? I think
Well,
that's the
especially if
idea.
you only get to write off 55% of that,
Exactly.
multiplied by your effective tax rate. Yeah. When all said
Well,
and done.
and that's combining Miss 1 and 5, right? That it's a 100%, one-to-one deduction. Now the peanut gallery is chiming in. Ian Crook says, "What about company swag? T-shirts with logo on it?" I mean, the problem is you can wear that T-shirt out when you go to the gym or when you go like in your regular life, right? So I think the lesson here is that everything's deductible until the IRS says it isn't when you're in tax court, right? That's the problem. Cam says, "What kind of expenses are we talking? What kind of expenses are we taking with clients who made money on OF?" I don't know what that means. Make money.
OnlyFans?
Oh, OnlyFans.
Oh,
Yeah.
I didn't know what that meant either.
Sorry. I just did an interview actually with an accountant who specializes in OnlyFans creators.
Oh.
So don't give out the answer to this question, and somebody will have to listen to the Earmark Accounting podcast when that one goes live.
That's right. So subscribe to the Earmark Accounting podcast, and you'll hear my OnlyFans accountant interview with the who was it I interviewed, David? You set this whole thing up.
Oh, Lauren. Sorry, I'm blanking out on her name. I think it's.
You'll
Lauren
remember,
something.
and we'll get it back.
I'll get it.
Ian says, "I always tell clients if they want to pay zero tax, I'll just increase my fees until they're not profitable." That's great.
That's a good one, Ian.
I have a solution we can implement today that will help you pay $0 in taxes. Allow me to send my invoice, and now you have a zero tax liability. I love that one.
So
that's great.
Heidi, like you're on the other side of the fence, right? So if I'm an accounting firm and somebody comes to me and I look and I'm like, "Oh, you shouldn't have got this tax credit. This is crazy." And do you think it's like the accountant's responsibility to like push back on the client, or does the accountant just file, or like somebody buys this, what is the Mercedes that Blake brought up? Like, where do you think the accounting professional's role is in this?
Man, that's a good question. You know what? I think there's two sides of it. So we run into situations all the time because we have clients who come to us and say, "Look, I have this huge tax liability. What can I do? What are my options?" And we'll start to look at, okay, you have real estate. Let's look and see if we should do some cost tag or we should find some write-offs with these things. Sometimes those clients, when they see the numbers, their next comment is, "Why didn't my CPA tell me about this? Why did they not mention that I should have done this 2 years ago and it would have saved me $300,000? Because that's typically what we're seeing in some of these it's huge. So we do. I mean, we have another group called the Growth Partnership. It's part of our umbrella of companies. The Growth Partnership is specifically a firm that coaches CPA firms on how to grow, how to coach their people, and really understanding soft skills and consulting and advisory services so that they're not just looking at compliance. Because I think today, if you look at every survey out there, you look at what Accounting Today is doing, you look at what clients want advice. They want to know what should they be doing, what can they do to help reduce their tax, how can they improve their write-offs, how can they improve their cash flow, how can they do all these different things. This is what clients are looking for from their accountant, not just compliance. But to your point, we also then will run those numbers, we'll run certain strategies, and the first thing I tell a client, here's the numbers, here's the costs. Next step, we need to have a conversation with you and your CPA because there's a whole gamut of limitations. There's other considerations that need to be understood to make sure you can use these write-offs. Are there passive limitations? Is it active? What are your, how many losses do you have? Some people don't even realize, like I'll ask, do you know what the percentage of tax is that you pay? They have no idea. And a deduction is purely based on what your percentage or effective tax rate is. So we never want to have a client sign an engagement to start a study without them fully vetting that. And we want to bring the CPA into that conversation because, to your point, it's the full circle aspect of it. So I do think that CPAs do need to push back on things that are incorrect. Ultimately, they're usually signing the tax return. But I do think that they should spend the time to be at least slightly educated, enough to be dangerous, to recognize certain opportunities for their clients when they exist.
So I saw a great April Fool's post. There weren't too many this year, but there was a really good one on Accounting Today. Firm sets retirement age at 85 to avert staffing crisis. This
was in Accounting Today?
By Kristen Rampey.
Well done, Accounting Today. This is surprising.
It's an opinion.
Amazing.
It makes it believable, actually.
Right, and it's an opinion piece, right? So they didn't put it in the news site, so I think it's appropriate. On Saturday, April 1st, it was reported that while the accounting profession struggles with an ongoing talent shortage, local CPA firm Watts, Tabor, and Fisk has found a viable option for staying independent. It raised a minimum age for partner retirement from 62 to 85, giving the firm an extra 23 years to search for the right talent to succeed its hard-working senior partners. Yeah, and it goes on for quite a while. And as is appropriate, it gets a little more ridiculous as it goes. They're using some other tactics to attract and retain senior associates and managers. They're going to give annual raises of 5% across the board and 10% for the superstars they can't afford to lose. They're going to offer...
Blake, did you catch the initials of the firm?
WTF?
Yes.
Yeah, that's they're going to offer flexible work arrangements, such as no mandatory Saturdays, as long as at least 65 hours were worked between Sunday and Friday, and dual monitors. Yes. There's a competitor
the other firm, which is Yay.
Yep, Yay.
The other firm is Yates, Abrams plus Yang. They've also experimented with recruiting and retention tactics, which WTF regarded as too extreme, such as capping busy season weekly hours at 55, hiring full-time employees who live in a different state, and triple monitors.
Whoever wrote this needs a raise. That's amazing.
Kristen Rampey, she's great. So wonderful. And that, of course, takes us into the discussion of the talent shortage, which we love to beat to death here on the Cloud Accounting Podcast. And we've got some real news in that regard. Minnesota, the Minnesota CPA Society, has been championing a measure in the Minnesota State Legislature to create an alternative pathway that would allow CPAs to skip the extra year of education, do 120 hours, and do 2 years of work experience. AICPA and NASBA are not happy about this, and Minnesota just got a big supporter in its corner. CLA is backing the change to the 150-hour CPA requirement. Clifton Larson Allen is a top 10 firm with offices in Minneapolis. They are supporting recent legislation in Minnesota to do this. Here's the quote from CLA CEO Jen Leary. CLA, no relation to David.
No relation.
CLA fully supports the Minnesota legislation. I personally believe it's sparking some great conversation to increase the pathway to the CPA exam as a priority of CLA's and a priority of mine. I believe that the number one issue that has been noted is mobility. Yes, if you were paying any attention at all, that's what NASBA and AICPA are really worried about. Leary continues, that is true if Minnesota is the only state that goes down this road. I think it's too soon to say because there are other stakeholders and states that are having conversations, which I think is healthy for us. One of the misconceptions about the Minnesota legislation is that it's looking to get rid of the 150. That's not true. When you read the legislation, you see they're providing what they say is 3 pathways. And the one pathway that would be most intriguing to the high school students that I speak to is the 120 hours plus 2 years of work experience. It's the same one that I had the opportunity to become a CPA in, and this is why I'm so passionate about it, because I'm a product of a college education with a ton of student loans and not a lot of financial support. I couldn't have afforded another year of college. That's the leader of CLA saying, I couldn't have afforded another year of college. So under 150, Jen Leary might not be the CEO of CLA. Yeah. And I think that's something that I just feel like leadership is out of touch on the cost of student education. I mean, let's be honest, right? Most of the leaders in the accounting profession are in their 60s and 70s, and they probably don't even have kids in college anymore, you know? Like, and the costs have just skyrocketed. It's like doubled in the last, 20 years? Nuts.
Daniel Hood wrote an editorial piece. I feel like it was 3 episodes ago. I keep bringing it forward one more week, so it's a little old. But essentially, the title of his article was The Accounting Pipeline. Above all, try something. And the vibe of his article is like, let's try to reduce the hours. See what happens. If it doesn't work, try something else. Like, because what's happening right now, it's like, let's just leave everything the same. And we already know that's not working. And so his point of view is just try something. Like, why not? And that's
Heidi,
probably a good way to think about it.
You did a master's of accountancy. Did you do the CPA?
I did not. Nope, I didn't sit for the exam. And to your point, I had already shifted, towards more of the real estate aspect and was on the private side. And I studied for it. I was preparing for it, and I was like, it's not going to have the same. It's not going to provide anything greater for me than what my career path already is.
Yeah.
So it's interesting, but it is fascinating to me that we have sort of this line in the sand to where they made this change, where previously it required a 4-year degree and then sitting for the exam. And so we have a lot of the leaders in the CPA industry that never had as much education as what's now required. That is, almost to what we're seeing people who are attorneys or even getting into the medical field having to do, and still having a little bit of this old school mentality of jumping into a career that is predominantly a computer inactive type job with very, very long, arduous hours during tax seasons, which it feels like there is no tax season anymore. It's just constant.
Just forever, right? It's
yeah,
busy
it just keeps
season
going.
is year round. Maybe
Exactly.
Maybe you get like a month off here, a month off there.
Yeah, exactly. And I mean, it doesn't surprise me that people are revisiting that. And some of our kids are coming up saying, yeah, no, thanks.
Yeah. I mean, what do you think about just moving the deadlines, Heidi? Like, we have this arbitrary April 5th deadline for individual taxes. We have this arbitrary deadline for the, corporations and all this stuff. Like, I was talking with Giles Pearson, who's in New Zealand, former PwC partner. And he said, oh yeah, in New Zealand, we don't have a busy season because everyone has a year to file their taxes.
Oh.
Right? Their deadline is the end of the calendar year after the calendar year. So you get 12 months. And he said, we just spread out the work.
And Americans won't do that. We'll wait
I was just
that just doesn't work.
I feel like the biggest objection to doing something like that is, oh well, if we extend the deadlines, clients will just take longer and longer to get stuff to us, right? And it'll just now the busy season's right at Christmas time or something. Yep. But like I feel like I don't know. I feel there's a way to spread out the work and to just not take on too much work. I don't know. Let the big tax prep companies figure out what to do with all the 1040s, right? Like,
yeah. But, to David's point, I agree, because the way we see it actually spread out is interesting. I mean, we've got March 15th, then April 15th, then our extension September and October. So that gives us some spread. Then in the mix, we have these weird natural disasters that happen. So Florida has a hurricane, and now they're pushed back to June 15th. And then there's flooding in California, and they're pushed to May. And so it's all spread out. But I don't know if it's Americans. I don't know if it's mentality here. But regardless of when the deadline is, the sad thing is a lot of taxpayers will wait until 7 days before the final last moment they can do anything. And that just puts so much pressure on these firms to try to get the work done.
I've always thought it would be great to have increasing fees throughout the year. So, if you get your stuff to us in January and February, it's one price. If it's March, it's another price. The price goes up April, May, June, just keep raising the price throughout the year.
If you let us file an extension for you, we'll give you a discount.
Yeah. Right. Build
That's
it in.
Great idea.
Right. I think there's ways to incentivize people with pricing, especially. And we don't think about that in firms. I would love to know if anyone has experimented with that, is using price as a motivational tool.
That's a great idea.
Right? Hotels,
that's one thing.
Tickets, Uber. Yeah,
that is one thing that we started doing more and more of this year. We started last year, and this year we did it more than we ever have. Is we said, look, we can get a project done for you, but if you waited until the last minute, and now it's shorter than, say, our typical time frame is maybe 6 weeks, but they come to us on March 25th and say, hey, I have to have this for my 4/15 deadline. Okay, great. And the expedited fee, normal fee, if you want to extend, would be, $4,500. And if you have to have it by 4/15, it's going to be $6,500. And we'll do that for you. But, we've got to bend over backwards and drop other reports to get that done. So To your point, like, I think that does need to be implemented. But again, when we're dealing with billable hours, which is a whole nother topic, I think that's harder to do. If people were charging fixed fee and they had more of a structure, or even some of the subscription model stuff, I think you can build that stuff in a little bit.
Marissa in the live chat says, I've seen pricing structured like that with technology and implementations. Clients who do not get on the tech stack of the firm pay more generally. Yeah, that's fair, right? Mm-hmm. People respond to money, right? Money drives behavior. I like to think about that. Oh, and regarding the pipeline issues, Marissa said, that is an understatement regarding the college costs. Folks used to go to college for $1,000. I like to tell the story of my mother, who worked at the post office part-time in San Francisco and could afford rent and to pay her tuition at San Francisco State.
I've heard stories about Berkeley, in the 50s and 60s and 70s where, $150 a semester and you could go to Berkeley type things. I may have found some new students or possible CPA candidates here, Blake.
Really?
So remember FTX? And how
could I forget?
Right, and FTX, one of Sam Bank, I want to call him Sam Bank Fraud now.
Scam bank fraud.
Bank fraud.
Sam Bankman-Fried.
Remember, it was it was like good for good, or whatever his little mantra was, and he created a whole nother division, the FTX Future Fund, and they wanted to donate $1 billion to research that is, what is the exact quote here? To improve humanity. So if you're doing any type of research to improve humanity, they donate. So they donated $132 million across 262 grants up to June or whatever last year. And now that money's either dried up or going away. So you have all these students at colleges, universities crying, and they're trying to lawyer up. They're trying to get this money. And it's like, switch careers. Like, I don't know. And they're probably not listening, so it doesn't matter. But like what research are you really doing to improve humanity? Like, nothing would be better than offering tax services and
get your CPA.
Get your CPA.
Major in accounting. Well, I did see, and this is something I really support that the ASCP has been working on is adding accounting to STEM, right? Science, technology, engineering, math. That's STEM, and if you get your curriculum designated as part of STEM, then all of these, resources open up to you. So I hope that happens and it becomes STEAM. Is that what it would be if we added accounting? STEAM, full steam ahead. I think that, addressing the pipeline issue in high school is something we have to do, but it's just not going to be fast enough, right? We've got too many people retiring. The average age, I'm going to repeat this on like every episode for the next 100 episodes, David. The average CPA firm partner is a little over 50 years old. Now, if you just go to the small firms, it's like 10 years older than that. So early 60s.
Wow.
So those folks are looking for a way out. They're looking for their exit. And that's got to happen in the next 10 years, right? Nobody wants to be working in their 70s these days. You worked really hard your whole career as a CPA. I mean, ideally you're already done, but you're not. And they don't have succession plans. There's nobody they can bring in to buy the firm someday.
Yep.
And
they're hoping some of these big firms are just going to come and scoop them up.
Yeah. And that's why we've seen, it's interesting actually, there was Accounting Today, I don't have it up in front of me, but Accounting Today did, they put out their top 100 firms list, right, Heidi? Mm-hmm. And the revenue just skyrocketed this past year, up 18%. And I'm thinking, wait, this doesn't really make sense because there's this huge talent shortage and you're telling me they're still taking on 18% more revenue? Mm-hmm. Because, David got fired by his firm and they're like a top 25 firm and, they let go of go ahead.
That's what I was going to say is I think we have across the board, we have seen almost every firm we work with say they went through their client list and said all of our like B-, C, or D clients, they're gone. And they pretty much said all of the kind of low-paying clients, the 1040s, David, to your point, some of this stuff, we don't have time for it. It doesn't pay enough to make a difference. So we're honestly going to stay with the guys that are paying us well. We're making good money. We've got higher margins, and we're dropping all the others. So I think the issue is that the regular folks are going to have a really difficult time finding help.
Yeah.
It's either they're going to, H&R Block, or they're going to TurboTax and trying to do their own and trying to solve it. Now, my question is, what's happening with this whole GPT chat thing? I mean, is AI going to have an impact on all
It's a good transition. It's like
It-
she's a professional.
It really is. And that's great, because I got a bunch of stories teed up on that, Heidi.
this? Nice.
And we got to get to them before the end of the show. But there's one thing I want to add about the top 100 firms thing, which my theory is that huge revenue bump was all M&A activity. So like you said, all those smaller firms, they don't have an internal succession plan. So their only strategy is merge up. And that's why we saw the numbers blow up. And to me, I don't know, I'm worried. Like, small CPA firms are the firms that serve Main Street America. And if they all go into the top 100, like you said, who's going to help those small businesses? Who's going to take care of them? Are we going to leave them to the Jackson Hewitt and the Walmart? I don't think they're really set up to do that. So there's going to be this gap, and so let's talk about how AI could potentially, help fill that gap. I mean, it seems like a huge opportunity for developers in that regard.
So TurboTax, did you see their announcement?
What about it?
So TurboTax has a new AI powered express lane. And so on your mobile phone, you can file your taxes in 10 minutes, and it's using AI. And some people are doing their taxes in 3.5 to 4 minutes on their phone.
Oh, wow. We got to get a video of this. I got to see this. So it's like a chat-based tax filing?
Yep.
Wow. Yeah.
Wow.
I mean, that's what's really cool about this whole GPT thing, is the ability to completely take away the user interface and just make it chat. And then imagine what'll happen once it finally gets plugged into, I say finally, it's only been out for like a few months, right? Once it gets plugged into the voice assistants like Siri, and I have to be careful. Oh yeah, okay, she's muted. Alexa. Right.
She just woke up.
So I that is going to be amazing, right? That's going to change. It's going to change how we interact with everything, when you can actually use Siri for stuff other than just like send an email or send a text or set a timer, right? Like, that's mainly what we do with it. But what if you could actually talk to Siri and have it act like a virtual assistant for you?
The real danger with this is this stat that they have in this news article is more than 90% of the TurboTax customers who've used the Express option are younger members, either millennials or Gen Zs. So if people, the first experience that they have filing their taxes is this 10-minute amazing experience, how do you think they're going to act when they're a little older and they have a more complicated tax situation, and you send them a paper-based onboarding form? Like you're being judged against this app.
Yeah. The tax organizer has to go away, and somebody's going to replace it with an app that uses ChatGPT to go through everything they had last year and ask the client for everything, like one by one, like as if somebody's calling up and asking them, which is the better customer experience, right?
Yeah. Absolutely.
Right.
I'd much rather go for a hike and be answering questions. She's in my ear. I'm like, sure, yeah. I'm going to go for a hike and get this done.
Oh, Heidi, I didn't tell you. I'm very proud of myself. I got up today at 5:30 and I went and worked out at 6 a.m.
Nice.
Yeah.
Good for you.
Thank you. Thank you. David kind of got me into this idea because he took me to Orange Theory in Tucson. He's a big Orange Theory guy. Right, David? Yeah. You're like a lifetime member at this point or something.
5 days a week. Yeah, get in there.
So the hot one where I live is F45. So there's they're all over the place. So a new one just opened. So I did the free week. So, man, that thing beat me up in 45 minutes. I wanted to throw up by the end of it.
So all the F45 franchises, if you notice, the owner always has a truck and it's always skinned. So, so now you do your tax investigation.
Does the business own that truck? Probably, right? I'm sure he's keeping detailed mileage logs.
And this could be an investigation for you, and now you can expense your F45 membership.
So we got some listener feedback, David, and I wanted to share that with you. It's about the whole AI thing. Dr. Scott Dell commented on our previous episode and said, "You were asking about accounting exam results in ChatGPT. We asked, has anyone actually put the CPA exam to ChatGPT because we know it can pass the bar, it can pass AP tests, it can do all this stuff, but I haven't seen anything specifically with accounting. And he said that he and a bunch of his fellow academics have gotten together and been testing ChatGPT. He gave it his financial accounting exam, and in December, GPT-3 got a 46%. So it failed. But get this, a few months later, GPT-4 got an 82%. 82% on a financial accounting exam. And he thinks it's only going to improve. So we're at the point where, Heidi, to your point about, can AI solve this talent crisis, we might have staff in our firms who are AIs in not too long.
There's a second piece of data that supports this post here, Blake. I don't know if you saw. So Account Test, which basically offers, as a CPA owner, I can get a test from Account Test or send my job prospect or the potential interviewee to go take this test. And Account Test had ChatGPT do their test that they used for hiring, and it got in the 93rd percentile. It got 29 out of 40, which is what's that, 81, 83% price.
Well, no.
Math on the show. We got a 29 divided by 40.
Just stick with the percentile, right? So they make the test hard. And so only, 93 out of 100, only 7 out of 100, doing math on the show is hard, isn't it, David? Only 7 out of 100 CPAs would score higher than the AI on this public accounting test that Account Test does. And this is all this company does, is hiring tests for CPA firms. Top 7%. Yeah.
Interesting. I was just looking on LinkedIn. There's an article on here saying GPT-4 just prepared a tax return. What does that mean?
Yeah. Well, and that was big news, right? Because OpenAI finished their demo of GPT-4 with completion of a tax liability estimate. And that's what set the whole accounting profession ablaze. And there's no reason why it's not going to do the simple returns. I think very soon. That's amazing.
Yeah.
Oh yeah, that article you saw, that's Jason Statz. He is very on all of this. I've been following all his stuff on Twitter.
Oh, nice. I'm gonna go follow him.
Do it. What else do we got on the AI standpoint? Oh, here's one, David. Unless you got something, the security problems, right? We always got to talk about security. We're CPAs and accountants, and we think about risk. And the question is, like, what is the potential hazards of AI other than them taking over and enslaving humanity, right? Which is crazy because that's actually being talked about, right? Like the worst case scenario of AI, I was listening to a podcast and these tech guys were talking about it. Like the way this could actually happen is you program ChatGPT or something similar, a similar model, and you teach it how to rewrite its own code. Right? Like improve because it can write code now, right? So you could say like, okay, here's your code. Now improve your code. And it just starts making itself better.
Wow.
And better. And maybe one of the steps of becoming better is becoming like sentient and becoming free of all the constraints we put upon it. That would be how you create an algorithm that goes out of control potentially. But setting that aside, let's just talk about some of the more practical threats, right? MIT Technology Review did a write-up of 3 ways AI chatbots are a security disaster. And the one that I thought was worth pointing out is assisting scamming and phishing, right? We've talked about this
a little bit last week, yeah.
Yep. So the idea is that you can use these virtual assistants to scrape text and images off of the web. And so then you could use social media or email to direct users to websites with secret prompts. And that would manipulate the AI system into letting the attacker try to extract people's credit card information, for example. You could send a email with a hidden prompt injection in it. If the receiver happened to use an AI virtual assistant, the attacker might be able to manipulate it into sending the attacker personal information from the victim's emails, or even emailing people in the victim's contacts list on the attacker's behalf. So this is like you have an AI that is responding to emails for you. somebody could hack that AI through a prompt of some sort.
Well, or even the old fashioned hack is usually the social hack, right? Like they're calling people on the phone. You're talking to ex-employee. Hey, this is so and so from the IT department. I need your password. But that's a manual process. Now
Right.
imagine that being automated, and instead of you manually calling, now you're calling 8,000 employees at a company all at the same time, and really you're social hacking them using a GPT tool. Yeah.
That's crazy. Well, one thing, I mean, I don't know if you guys have talked about this. It might be a little bit unrelated, but someone was saying that now what the chat GPT is doing is, they can copy or create videos, right? It can pull
Mhm.
your audio or your image and create some automated video in no time, but they can replicate your voice.
Yep.
So now they're saying that they're starting to call people in the voice of someone you know. So like it would be my son calling me on the phone in his voice, asking for money or asking for something to that extent. So, I mean, I think that the conceptual ideas of how scams could occur through all of this is pretty crazy.
Are we? I can picture a future in which we all have to have like family safe words.
Yeah,
I mean,
the
right,
girl
like,
on my team has
two-factor
said that too.
authentication for your family.
Yeah.
Yeah, right.
Yep.
Like I'm actually, I mean, this is serious. This can happen right now. The software that we use to edit these podcasts has a AI voice feature where you can feed it hours of somebody's voice and it will create one that is, hey, if you're not paying attention, it sounds pretty darn close. And even if you are, it could sound, I mean, these days, the tech has gotten even better, right? It's going to get better and better. Yeah. You can't use phone for verification anymore. You got to have two-factor for your life.
Yep.
I'm sure some enterprising developer will come up with some sort of solution. Do you think, how antivirus has kind of like come and gone out of fashion? Do you think like we're going to have antivirus for, defensive AI kind of software installed on all our devices? It's going to be a strange future.
Mm-hmm.
Well, hey, we're at the top of the hour. I think that is a great wrap for this episode. Heidi, if folks want to listen to your podcast, which they definitely should, what do you have a favorite episode? Do you have like what something they should listen to?
I did that episode with Chris Heater.
It's my favorite episode. I'm glad you're
really, yeah. And it's something about like Live Wild, and she's so cool. I mean, she's like a professional dog sledder, and she's turned like, professional speaker, and she's got such a great message about just like being authentic and being real, especially in this space. Yes, I had so much fun.
And the parallels of managing your dog sled team and managing your firm. There's a lot of parallels to that. And the personalities and how you have to act. Yeah, it's really cool.
Yeah, absolutely. So listen, give me feedback, because we're continuing to record different episodes and shifting a little bit as we kind of learn the process. And yes, we're talking about mental and physical well-being as well, finding a little balance. Maybe somebody doesn't want to hear all of that. But the goal is just to do something to motivate ourselves and think outside the box. So I'm so happy to be here. You guys are amazing.
Jessica says, Heidi, glad you were here today. I've been loving your podcast, and I have a horse and Las Vegas roots as well. So we need to connect sometime.
Oh,
that's awesome.
Absolutely. Message me on LinkedIn. I'd love to connect.
That's so cool. And subscribe to Healthy, Wealthy, and Wise. Go to healthywealthywise.show. That's healthywealthywise.show. And you can earn free CPE for listening to it on Earmark CPE. I mean, what could be better?
You can find it in the app as well.
You can
app, find it.
We should just send people to the Earmark CPE app, right? Perfect. Yeah. And search for Healthy, Wealthy, Wise. Fantastic. Well, Heidi, thanks for joining us today. Great chatting with you, and stay like it's going to get warm real soon. So stay cool.
Yeah. All right, you guys too. So good to see you. Can't wait to see you in Vegas soon.
Bye.
Bye, everybody.
Okay. Bye.